Hello, my name is Robert Garcia with Merit Lending. A little bit about myself. I've been in this business since 1989, starting out as a real estate investor, then got into being a real estate broker, and now I'm in lending since 1991. Today we're going to be discussing buying a home with an FHA loan. It's not just for first-time buyers anymore. FHA stands for Federal Housing Administration. FHA is part of HUD. It's not a bank and they don't lend money. They insure the loans, helping lenders lower their risk to help families purchase homes if they have a little bit less than perfect credit. FICO is as low as 500. Limited savings for down payment. Gift funds and seller contributions are available in this program with a maximum of 6%. With some preparation and some planning, it is still possible to turn your real estate dreams into real estate reality, and I'm here to help you. Stable work history, a main factor lenders are looking for, is how reliable and stable is your income. 2 years work history, same type of occupation, at least for 1 year. There's no gaps over 30 days of employment. Social Security income, retirement income, even child support can be used as long as you received it for at least 12 months and can document it, and will continue to receive it for at least 3 more years. Self-employment income can be used, but beware, your deductions may lower your gross income and stop you from qualifying. There are some credit requirements. You must have at least a 580 FICO credit score to qualify for the maximum 96.5% loan to value, offering you just the 3.5% down payment. Credit scores less than 580 can still qualify, but they do require a 10% down payment. Let me break down FICO scores for you a little bit. 30% of it is for the total amount owed on credit. 10% is new credit. 15% is for length of credit history. Another 10% is for credit mix, and the biggest part is payment history. Keep your payment history good, and it'll work on helping your FICO score stay up. Sources for down payment and closing costs. You can use your savings or checking. You can get gifts from family. You can get a grant, a second mortgage, maximum 3.5% for your down payment or closing costs. You can have down payment assistance programs, lender credits, loans secured by other real estate or 401ks that you participate in. Seller paid closing costs, maximum 6%. Buyer broker rebate, maybe your broker is willing to help you make things happen, especially in this market. Another part the banks are looking for is debt to income ratios. A big factor to determine if someone qualifies is income. The way they use to determine that is through a review of what's called your debt ratio. Debt ratios are a comparison between your income versus your debts. Currently, automated underwriting findings have approved loans with debt ratios up to 46.99% for house payments, and total 55%, including house payments and any other credit payments that you may have. Debt ratio formula, total liabilities per month divided by your total gross income gives you your total debt ratio. For example, if you make $7,500 a month and you have debts including credit cards, car, home, student loans, of $3,000 total, your ratio is 40%. That's $3,000 divided by $7,500 gross income, 40%. FHA has maximum loan limits depending on the state and the county. For Clark County, Nevada, for a single family home, you can get a loan for $420,680. For a duplex, $538,650. For a triplex, $651,050. For a fourplex, $809,150. This is Clark County, Nevada. Maximum FHA loan limits in Los Angeles, California. For a single family resident, it's $970,800. Duplex, $1,243,050. A triplex, $1,502,475. For a fourplex, $1,867,275. Remember, I'm licensed both in Nevada and California. I look forward to helping you. There are different types of FHA loans. One is for purchase. You can finance your primary residence with as little as 3.5% down with a 580 plus FICO score. Gift funds and seller contributions are allowed up to 6% maximum. 203K home improvement loans, you can use it for a purchase or separately for home improvement refinance. Used to buy properties that need a little TLC, the loan is closed on time and an escrow account is set up to disperse the repair payments. There's energy efficient mortgages, similar to 203K, used to add energy efficient enhancements to the home. The intent is to lower utility bill in the home to make more funds available for the mortgage payment, cost efficiency. The energy assessment is done on a windows, insulation, solar, or wind technologies are all allowed. Reverse mortgage helps borrowers over 62 have access to the equity. Qualified borrowers can not make payments and or receive payments from their equity instead of making the payments. Can be used to buy a house also. Maximum loan to value is 80%. So borrowers must have 20% plus closing costs to qualify for a purchase using a reverse mortgage. Okay guys, it's time to get rid of your doubts. Know where you stand. Let's meet and explore your options. You can use the calendar link below to set up a time. Please complete your application before our meeting to give me a chance to review your file and be prepared to offer you some options at the time we meet. When you get 30 to 45 minutes, click on Apply with Robert, set your appointment, and I look forward to seeing you soon. This is the end of our presentation. Thank you. If you have any questions, please feel free to contact me, Robert Garcia, 702-955-1575. Funding loans fast and easy since 1991. Same day approvals. Click on my online application or visit my website. Thank you and have a great day.